with Dr. Samiran Chakraborty, who's Managing Director and Chief Economist India at Citi Research Group, now joining in to understand a little bit more about what could potentially be expected. Thanks so much for taking time out. Let's get a sense from you, Samiran, as to what the outlook is on the overall policy front, given the fact that we're working with a status quo on rates. Do you think that that is potentially what will emerge from the RBI stance?
Yeah, I think this is one of the policies where RBI needs to be a bit more cautious because there are lots of moving parts. There are moving parts in the global economy where the central bank actions have got somewhat desynchronized. Even global growth is getting a bit desynchronized. Not every part of the world is going at a similar pace, which is very different from last 3-4 years when things were absolutely synchronized. But domestically, RBI can take comfort from the fact that the growth momentum is continuing very strongly, and inflation is at least not showing a significant sign of increasing, although we must say that by our estimate, the inflation trend which will be released in June for the month of May, that could inch up a little bit to 5.2%. But overall, this combination of growth and inflation is probably telling them to stay on guard. On top of it, given that there is now some uncertainty on the fiscal outcome, they might want to see through it. They want to see through the monsoon situation as well before they can embark on the easing process.
Would it be premature to expect that perhaps the MPC is going to soften their stance? I mean, could one anticipate perhaps a withdrawal of accommodation to now neutral?
In my view, this is a policy where the MPC should be focusing more on risk minimization. There are some risks emerging, particularly on fiscal, bit of political uncertainty. In these kind of times, it's better to not rock the boat by doing major changes. So in that sense, the change of stance could more be an August policy discussion rather than in June. But having said that, we've been arguing for a while now that the preconditions for a rate cut and preconditions for a stance change are becoming very difficult to distinguish. It almost appears that RBI will do the stance change very close to the actual rate cut when they have absolute comfort that the headline CPI is firmly aligning with the 4% target.
Right, Mr. Chakraborty. Also, what we also want to understand is that will RBI actually wait till the Fed cuts rate, or would it take, and would October be the period that we should start seeing rate cuts coming in from the RBI, or will they be waiting for the Fed?
So in Citi's house view, we think that the Fed rate cut will start early. So we have put our first RBI rate cut in October, to some extent also factoring that in, that if Fed moves earlier, then RBI gets the scope to move as well. I will actually be a bit surprised if the RBI cuts rates before the Fed, although I must say that in general, the extent and depth of the rate cuts will be determined more by the domestic developments and less by what is happening globally. Or in other words, RBI's main objective would be to see that CPI is aligning with the 4%. But in any case, moving ahead of the Fed, I don't think any of the Asian central banks would be planning for that at this moment. And RBI would definitely want to see how this is going.
The other thing, Samiran, and I'm going to deviate a little bit from the policy here because you as well alluded to just a short while back. It's clear that there's leadership continuity now. Would it be a fair assumption that there would be a policy continuity too, irrespective of whoever becomes the FM, whether the current one or a new face?
Our view is that the broad thrust of policy, which has been a combination of infrastructure, manufacturing, technology, digital, There will not be any big deviation in that. Also, we have through difficult times earned this financial and macro stability. Uh, I don't think the government would want to lose that at any cost. So that financial macro stability and this broad thrust of infrastructure, manufacturing, technology, and digital, this combination will be there for the new government as well. The only thing is that what all do they add on to this? Would there be an element of active employment creation modules attached? Would there be something to do with helping out the poor in a more explicit way also being added? Those are things which will be interesting to see. But the first two big structures, I think they are going to remain pretty intact under the new government as well.
I mean, is it right to think that now the government would have perhaps some amount of pressure or compulsion to increase social spending? Because, that's going to sort of change the entire dynamic of all the assumptions on a macro level that one has been making so far.
Obviously, any government will analyze the political outcome and try to figure out that what has been the reasons for that outcome, and from that will deduce whether there is any policy intervention required or not. But at least for fiscal year 25, the government does have some fiscal space. The RBI dividend has been significantly large, and the revenue growth at this moment is happening at a better clip than what the government would have probably budgeted for. So, in our view, about 0.4% of GDP of additional fiscal space is definitely available to the government, even if they want to stick to that exact 5.1% of GDP target that was announced in the interim budget for fiscal deficit. So that's not a very small sum of money to start some additional social spending, etc. The only thing I would say is that typically when you plan for these schemes, these are not one-offs just for 1 year. This has to be planned in a way that can be continued. So we need to find out revenue sources which will also be more durable to support those kind of schemes.
Appreciate your time, Samiran. Thanks so much for joining in and taking us through what exactly you're penciling in when it comes to the Reserve Bank. A quick check-in as to what the market is up to and as things...
If you like this video, then like, share and subscribe to ET Now.